Welcome to Scouting for Growth. I'm your host, Sabine VdL, and today I am thrilled to welcome a true trailblazer in the global InsurTech landscape, Dr. Magdalena Ramada Sola. Oh, Magda. Magda is a Senior Director and InsurTech Innovation Leader at WTW's Insurance Consulting and Technology Practice, formerly Willis Towers Watson, where she spearheads the company's engagement with InsurTech startups and blockchain initiatives worldwide. With over 2 decades of experience, she has become a prominent voice in digital transformation, advanced analytics, and emerging risks within the insurance industry. A passionate advocate for blockchain technology and its transformative potential, Magda has delivered more than 200 speaking engagements at international conferences and published extensively on InsurTech and blockchain innovation and the industry needs to address emerging risks. Her expertise spans from macro insurance and financial inclusion to emerging markets and multinational enterprise strategies. Driven by a deep sense of responsibility towards future generations, like many of us are, she's committed to empowering women and young talent in tech and promoting technology education across all levels. A vision for what she calls the financial singularity and dedication to the insurance industry's social mission make her a unique and insightful voice in the field of insurance, technology, and innovation. Today, we will explore Magda's journey in InsurTech, vision or views on the challenges and opportunities in the industry. And yes, we will dive into her vision for the future of insurance technology. What are the emerging risks? How technology is going to affect it. And we will also dive around some of our plans for ITC Vegas 2024, InsurTech Connect 2024, which will take place in October this year. And we intend to actually start bringing some thought leadership here to start moving some things around. So Dr. Ramada, welcome to Scouting for Growth. Hi, Magda. So nice to have you today on Scouting for Growth.
Thank you for having me. I'm really happy.
So let's start with some introduction. Let's just explain who Magda Ramada is and, what got you to be with, WTW. I was going to say Willis Towers Watson, but it is not Willis Towers Watson anymore. It's WTW for, I think, over 18 years, which is an amazing time in one single company nowadays.
Yes, it is. And I'm very proud of it, actually. It was by chance. I was hired by Watson Wyatt many, many years ago, as you said, almost 19 years. And we were setting up an innovation and research function back then in Uruguay, where I'm from. And then we also had an office in India and one in China. And so I was hired out of London. I was living in the US, in Germany. I was on my way to Zurich, actually, on my maternity leave, and then got an offer from Watson Wyatt to go back to Uruguay and do research in a private setting. And that's how it started. And I never left. I have reinvented my role and did several things in the last 19 years. It hasn't been very linear career-wise. I did lots of very different things, but that's how it started 19 years ago. And then it was a very nice journey. Very early on in my career, I got a lot of responsibility. At some point, I had those 3 offices, different time zones, over 100 people. Really trying to push research for for different stakeholders in a company that did a lot of very different things. And then we merged several times and went from 10,000 to 20,000, 40,000 people. So it has been quite a journey.
So it's interesting because you talk about research, and I would call it R&D, because as you know, as we build lab, we believe in R&D, in research and development, and really looking at the trends which are going to affect our industry continuously. But you have a background as well as an economist. So can you take us about also Magda before WTW and what actually got you into research and development and actually therefore insurance technology?
Yes, so I wanted to become a civil engineer. And then at some point, I decided to become an economist. I started my studies in Uruguay, decided to go to Germany to do genetics, and ended up doing mathematical finance instead, and did my master's, and then I did my PhD in Germany. And I was very passionate about economics, about monetary economics. That was my area of expertise, international monetary economics, and things like, macroeconomic risks and what leads companies to take decisions, to move around the world, to set up greenfield operations. And so that's kind of the background of where it started. Nothing to do with insurance. Instead, I always say, we had like electives, and I could have chosen insurance economics 3 times in my career, and every time I could choose it, I chose something else. And then some 10 years ago, I did one project for a very large insurance company in Latin America. Their CEO wanted to look at lobbying risks and macroeconomic risks. And I was an expert on geopolitical and macroeconomic risks. And I felt super self-conscious about, talking about risk to the CEO of an insurance company. So I remember studying like I hadn't studied for a workshop and preparing that. And somehow it was a great experience. And after that, everything I started doing was about insurance, and I got involved in microinsurance, and that led me to blockchain technology. And then I realized that blockchain would change the way we can mutualize and tokenize risks, and had the bad idea of writing an article. And then overnight, I was like one of 5 people talking about blockchain and insurance. So it was really by chance, right, that I got into insurance and into technology, which have become 2 passions of mine, and I don't think I'll ever leave. But it was by chance 10 years ago.
So you're a leader in this field, and I think I've read that you have probably delivered over 200 conference presentation, if not more, right? We are both always on stage every
Yes.
year. I mean, if you knew, I think it was between 2022 and 2023, I realized I probably attended over 20, 25 different conferences in one single year.
Yeah.
So that represent 40 to 50 travel internationally. And actually, my accountant said, you may actually slow that down because it's not very good for your health. But, the cost of the travel
I know.
is
Yeah.
astronomical.
It's crazy, right? How it took off. And then even after the pandemic, we got back to a rhythm of events that I don't know if it's actually very productive, right? Because a lot of these events have very similar content, but it's true. I don't know if it was 200. At some point I started counting I remember having like all of these links and having a list of what I was doing, and then it became unmanageable. But I like being on stage. It's not really the being on stage, but it's the closest I can get to teaching. I used to teach at university for 13 years, and it's a passion of mine. I really like explaining things, and I kind of have a talent for explaining very complex things in simple terms. So it just happened. Obviously, when you're doing that on a conference stage, you never get to the level of depth that you would get to when you're teaching. Um, and so it's a different dynamic, but I enjoy that, the feeling that I'm having an impact, that I'm educating others. And this could be girls at an all-girls school, used to do that, or it could be executives, it could be closed doors, kind of a board meeting, or it could be an audience of 3,500 people in California. So it varies a lot. The dynamics, obviously, of the audience varies a lot, but it has the educational, inspirational component, and I enjoy that.
Yeah, no, that's superb. So let's go a little bit deeper
Yep.
in the field of insurance technology. And I say insurance technology rather than InsurTech, because I think when we narrow the word InsurTech, you and I know it is much bigger than insurance
Yes.
technology or InsurTech. It's technology for insurance. And therefore, you mentioned blockchain, right? We always go out of our industry to actually really understand what is going to affect
Yeah.
it, change it from a risk mitigation viewpoint, risk transfer, risk management, but also all this emerging technology is bringing also emerging risk. So tell
Yes.
us, Magda, what do you think are the significant challenges and the opportunity which is going to impact our industry and maybe your client's industry? Because the nice things about insurance is touch everything, real estate, aviation, fashion and sports as well. It touches everything. So whatever we are passionate about, we can actually talk about it as well.
Yes. So, okay, that was like 15 questions in one question, Sabine, but
I know, that's
essentially,
me.
so if we go back to insurtech or insurance technology, right? And I always say, I always make the joke, I started doing insurtech before we had the right spelling, right? And I still go crazy when the E is in insurtech because it's like at some point we lost the E and I thought it was a good thing. But at the end of the day, one of my taglines when I talk about the work we do at W2W is really we're an insurtech since 1828, which is kind of funny because it means that I work at a company that's older than my own country. Uruguay was, was founded in 1830. But it's a definition of what technology is, right? And at the end of the day, technology is an enabler. Is it just pure modeling? Is it when we were developing what became a standard as in GLMs and pricing? That was technology as well. That needed technology to be enabled 20 years ago. It doesn't need to be AI based. It doesn't need to be shiny. It doesn't need to be a startup, as long as it is the right type of solution for transforming the industry. So insurance and technology is a complex world. You have technology that is actuarial. You have technology that's not actuarial. You have the bits that can be done by generalists that are about automation, the bits that really need the expertise of understanding what a workflow will look like, how much complexity and heterogeneity will be in that workflow. And then you have the complexity of how you handle the data and the calculations, what can be predicted, at what level, do we need granularity and real-time predictions everywhere or not, to which extent you have very different functions converging, sharing data, having a transversal layer of models and data understanding and a view of risk. So there's so many areas that you can explore in InsurTech. And then even in insurance, the applications of technology and the needs and functionality are very different if you're looking at personal lines, if you're looking at motor in a hardening market, or if you're looking at home insurance or pet insurance in a market that has a lot of margin and doesn't need the requirements that you would see in motor in the UK. If you look at commercial lines, like we have been talking for a while now, if it's life, if it's health, if it's non-life. So it's really a world that has a lot of complexity and a lot of things to do. I like to think that there's like three areas that we need to think about. One has to do with what are the tools that are enabling me to generate more data, analyze more data, leverage the data we already have. We are a very data intensive industry, and how that data can travel from very different functions and allow a very different target operating model where the technical functions converge to work as one. And then there's a number of specialism around that, right, that go very deep. And it could be generative AI, or at some point it was natural language processing or OCR, where you become an expert in a very niche thing, and you don't need to know insurance for that. You become the best in that, and then you become a connected specialism in an ecosystem. And all of that has to be connected. So solution architecture has become a very big world. And it's very difficult to actually find people that know what they're doing when they're doing the architecture of solutions. So yes, it's a world that has very a lot of components, very different types of providers. You will have specialized providers. You will have generalists that have tools that you could use for a bespoke system should you do it. And as you said, all of that brings risks with it. You have the risks of new technologies that we don't know how they are behaving. We don't know the type of vulnerabilities they generate. But then you also have the risks of the design of the things you're building, risks on how you maintain it, the hidden costs around a lot of that. So it's a fascinating world because it has, you have to combine the enablement the technology will give you, find the right places to actually use it, and then also take into account the risks of what we're building, the governance around your model real estate. So yeah, sorry, I could go on and on, but that's essentially how I view the area.
Yeah, but I think what you also are highlighting is, and I use probably slightly different terminologies. One part is really using the data and understanding what you can probably automate and actually do without really too much expertise, whether it's a claim department or underwriting department.
Yep.
Then you have another area, which is because of the complexity where you augment a human to actually do the more complex jobs with a different type of smart, partly to service the client, and client can be a consumer, it can be corporations, but still in corporation you have customers in those big organizations. So really giving them the comfort, the trust, the transparency that the job can be done in the right way. And then you have the last bit, which is the expansion. And then what I think about expanding is as you are looking at the automation and augmentation, then you actually go into that orchestration, that level
Yes.
of ecosystem build where you can actually manage not only your internal environment, you can manage your internal environment with external components so that you can actually drive differentiation. You're actually focusing on your core, what you really
Yes.
understand very well, and you allow others to come into your environment to actually manage what they do very well. But all that needs, as you said, to be architected,
Yes.
managed by experts. So when we look at it from a technology viewpoint, you're an
Yes.
expert in blockchain, and I don't know whether we have actually many experts in blockchain in our industry. And we've talked about blockchain a lot over the past 2 to 3 years with you, Magda, and we have gone into smart contract, computable contracts, and how this is going to affect our industry if we actually learn to do it well. Where
Yeah.
do you see the emerging, I would say, technology, such as blockchain? You mentioned generative AI, and there are many more we need to think
Yes.
about. I call them
Quantum
frontier technologies,
computing,
right?
yes.
How does that impact the risk we actually start seeing emerging? And how do we take advantage of it to build maybe new product and services?
So, the first thing you need to learn is how to understand how a technology is going to affect what you're doing, right? And as you said, there is a layer that's really about the data itself, and the access and liberation and analysis and deployment of the analytics to the point of decision making. Then there is the augmentation, and that part is usually, we all talk about human in the loop and augmentation, but at the end of the day, when you're looking at augmentation, you have to understand that you have very different what we call personas and persona journeys
Yeah.
in the value chain, right? And it could be the claims handler, it could be the underwriter, it could be the customer, it could be an online customer, it could be an agent. They all need augmentation, and you will need different interfaces and a different type of insight for different personas. And they don't all need to be real time, but they need to be timely, right? And they need to enable better decision making, data driven decision making. So not every technology is going to enable to do that. I mean, blockchain is a very cool thing, but there's a handful of things that blockchain can do differently than other technologies that are just pure automation and RPA, and that sometimes are more needed. And when we look at computable contracts, do we really need to go all of the way to computable contracts, or is it enough if we have digital contracts that are generating data at the right places? And do they need to be super granular, or are we going to get there gradually? And how much of that evolution unlocks which benefits, because the market is not shifting to becoming super technological overnight, right? It drags on. There's a lot of inertia, and systems are very sticky. So what I do is really when I look at technology, I ask myself, okay, what is fundamentally different about this technology? And sometimes, say, quantum computing, it's fascinating. Will we have something that's scalable and deployable anytime soon? I don't think so. I might be wrong, right? But then you can draw its inspiration out of it. What is different about it? Well, it is looking at the state of risk and randomness in a certain way. Can we actually inspire algorithms based on that idea? Do I need a computing, a quantum computer to actually do that? Not necessarily, but I can have quantum inspired algorithms that help me solve certain things, as in parallelization of information. So when you look at technologies, one, you have to try to understand why they're so novel, right? Besides the hype. And then what are they doing that other technologies cannot do? And do we need that functionality or that ability of doing something different in the context of, in my case, insurance? And so that's how I try to kind of filter out the hype and understand what technology can deliver that's different. I always say, and it's part of my LinkedIn, right? It's not me who said it, it was Einstein, but I think one of the things that really makes us different from other species is our ability to imagine how things can change and be radically different. So technology can help us with that, right? You see a functionality and it's like, okay, so we've never been able contracts where there's like third party conflict of interest before, but now we can. We never could have people have a self-sovereign identity because they sometimes have some incentives to corrupt their own data to get benefits, but now we can. What does that change? What is the economic layer and the activity that can arise from that was not possible before? And that's how you start thinking about the future of insurance and what needs to be done. That's very different from just saying, Well, we need to understand and predict risk better. And we need to make use of better data. And we can use additional models, and we can use machine learning. And we have been doing that for a very long time. And you can go from a GLM to a GBM to a layer GBM, which is an algorithm we developed, right? That's very specific to insurance, that allows you to have interpretability that other types of models don't have. But why do you do that? Because you know exactly what you need to change and what you need in the context of a very specific use case. And sometimes people in technology forget that, right? We talk to a lot of startups and they have one solution. It's like, oh, I want to discuss my solution for you. It's like, have you done your homework? I mean, I don't need your solution, right? So it's just going out there with technology and trying to change anything is never going to work. And I think that's a great part of the people that are successfully doing this. We're trying to imagine the future and think, okay, what will my insurer client need in 5 years?
Correct.
What is going to be critical? What is going to allow them to compete with others, to outperform, to become front runners? And what am I competing against, right? Is it feasible that the market shifts?
Well, it's important to understand whether the market is able to shift, as you
Yeah,
said, because there is a lot of inertia. And so, as you mentioned, a digital contract in some cases could be better than computable contract. Now,
yeah,
really understanding some of the big trends affecting us, we have seen, the inertia around embedded insurance, and then now it's a next big thing. And it's not just about personal, it's also around commercial when you start
yeah,
looking at distribution, right? You mentioned about data sharing and transparency. We also talk a lot, I think, about parametrics now because we have good data.
yes,
So more parametric products are coming to market. So really understanding where the market can go and a bit like an hype cycle, right? A Gartner hype
yes.
cycle, really understand where it's really going to hit the market is going to be critical. So how do you see your clients, insurance companies, really leveraging advanced analytics, artificial intelligence for underwriting and risk assessment? Because I've noticed this year is a big topic. It's where I tend to be asked most
Yeah.
questions, actually, Magda.
And it's fascinating because commercial insurance, like 5 years ago, people were like, "Oh, this is never going to hit commercial lines, right?"
Yeah.
And now we've seen an acceleration in underwriting workbench technologies and the ability to liberate data that we hadn't before, and automating the underwriting journey. So the last 3 years really have seen a lot of acceleration and interest in this. So, how is technology being deployed very specifically in the context of underwriting? In a number of ways. The first one has to do with finding new sources of data and finding data that enables you to underwrite new risks, right? Be it in the digital currencies contracts or digital assets or intangibles, be it in cyber, be it for electric vehicles and around new mobility patterns, be it, I don't know, smart containers, satellite imagery, wildfires. We've seen a very large number of players that have specialized in finding new ways of predicting very specific risks with new sources of data. That generates an opportunity and a problem. So the opportunity is now that we have different data, it might carry a signal that allows you to actually assess risks in a different way. So we fundamentally have two problems with certain risks. We have old risks where data is becoming obsolete and where frequency and severity are just changing radically. So we can't use the historical data we used to, or if we use it, there's a lot of of areas where we can't predict as effectively, and wildfires is a good example of that. But then you also have new risks where we don't have data, and the insurance industry has always had that excuse of, there's no data, we can't assess the risk, so there's no appetite for that. Microinsurance is a good example of that. That's not good enough, right? We have as an industry, it's in our remit to actually transfer risk. We have to find a way of doing it. So it's an opportunity because we will be better able to do risk assessment. But then it's also true that we have had a proliferation of data and data providers and it's very difficult to know, is that data really working? Is it really delivering any signal? Is it as predictive as the data I had in the past? How much lift am I getting from that data? Is the model that is being put together by, a Google X exploration of a certain area of data with a new algorithm, is it really that's more superior than what I get from my standard provider, because it's not easy to shift to a new data and a new ecosystem and a new solution provider, and insurance companies are not very good at that. They're, testing data and changing data and adapting models very quickly has never been part of our of the industry's DNA, at least in commercial lines. So that area is an area that has a lot of opportunity, but also requires that we operate differently, that we have the ability to understand where the opportunities are with those new data sources. But then it's also about, how do I augment a human, right? There is operational and soft aspect of augmenting a human, a decision maker, an underwriter, that are not as straightforward. Sometimes you have underwriters that don't want to be augmented, right? That have been doing this for a very long time, that have no ways of embedding the inputs they're getting in a very soft way through the lunch they just had, through experience they've had for the last 15 years, with whatever augmentation is coming from data. And it's not easy to reconcile, right? And the models that are delivering those insights, they proliferate. So how do you know those models are still right, or they are not discriminating, or they are abiding with certain compliance? How do you govern that model real estate that becomes very prevalent? So in the context of risk assessment and underwriting, I think data liberation and being able to visualize what data can tell you and understand what a model is delivering and why are the two most important components of anything you will do. But then it's also true that once you're able to liberate that data, access it, process it, and understand a risk associated to that data for very commoditized risks, you won't need the human anymore, right? So we need to really start having that, we call it alpha beta type of strategy, where certain risks just get automated, they get algorithmically traded. You can just have that happening and then have your brilliant people focusing on the other risks, which include emerging risk, where we have to figure more things out, right? And a part of that journey, which is the one I think is most fascinating in commercial lines, has to do with how much can we fragment risk? How much can we tokenize it? How much, atomic risk components can we have? Because the more you go into the different components of a risk, as in clause and subclause level, in a very complex type of program or policy in commercial lines, the more you can actually take, those little components from risk from one policy and another policy and another policy and treat them together and see how they behave in a portfolio and how they accumulate and securitize them and put them on an ILS market and generate more liquidity and access to more capital. So it's very complex, but the principles are very simple. And the principles are, how much can we make risks more, digestible? How small can those risks be? And what is the right source of capital to actually have an appetite for that risk and generate capacity? And that's, I think, the journey we're in.
Yeah, and I think it is very important to highlight at this point. It's why you are talking about technological or business architects, to actually understand that componentization, that macro level of bytes, so that you can actually start realigning your bytes in different ways. And the contracts, as you highlighted, if we have that stored in the right way rather than in documents, we can actually start shifting and creating that differentiation for the end user, which is a customer trying to find the really best product to serve them and then to actually meet their needs.
Yes, and opacity usually in very complex contracts and programs will essentially impact the price at which you're able to buy insurance and transfer risk. So if a contract is generating data at a clause level or at a subclause level, and you know exactly how those different pieces of data have to interact with itself, what the hierarchy and taxonomy of that contract is, and how that should be actually, applied to other contracts. And if you have this type of risk, you always need to have this type of exclusion or this type of additional risk. All of those things become machine readable, right? And the complexity of that contracts can be analyzed and it can be iterated. So in the same way we iterate product development in, in shoemaking, like Nike does it. I always mention that example, right? And you could do that with insurance as well. You can start understanding what happens if you don't have certain components, or if certain components behave differently, or if you have them everywhere, can I extract them? Can I put a different price on them? Will there be appetite in alternative capital sources for that type of risk that I don't want to have in my portfolio anymore? For that, we need a level of modularity and granularity in contract building that we don't have, sadly. And there's a lot of initiatives trying to do this. And there's, we don't have standards for that either. So the way you actually look at it, what is the right component of risk? There is no standard in this risk should behave in this way, and that's why it's priced in this way. Because if we want to have computable contracts and computable risks, we need to have computability, and that means a standard in understanding, how a risk is priced. And that's something where insurers feel they have their own advantages and their expertise and their secret sauce. So it's not as easy. I think conceptually, you see, it's like, okay, well, we can modularize risk. We can have all of this. We've seen securitization. If I can tokenize, I don't know, an apartment, why can't I do that with a contract and then extract the different pieces? But it's not that simple when it comes to valuation and to actually understanding and having an accepted standard for valuing risk. And a lot of the competitive advantage among insurers and underwriters are really in that, right? So which risks should still be like part of that secret sauce, and which ones are commodities that we shouldn't care about anymore. All of that is part of the transition.
Indeed. Indeed. And so that takes me to decision making. So I would like to actually get into your brain and help, our listeners to really understand how you actually conduct your workshop, your training session.
Yes.
How do you empower executives, whether they are women and men in technology or non-technology business, users, risk managers, to make better decisions? What is your experience? How do you work around this enablement and helping our industry make better decisions, maybe in an effortless manner? Because at the end of the day, we are in the business of decision making in a fast way nowadays.
So I think the first component to that is you tell them what the art of the possible is, right? So these are the new technologies, these are the limitations, these are the risks associated to them. This is why you should understand about this technology and not about this technology. So you just tell them what the art of the possible is. The next step is to say, well, this is what others are doing. We always have front runners that are experimenting. They are generating data and understanding data is in a sense of their use cases. They will know where they fail, where they don't fail. So it's important to understand what are others doing and how are they applying these technologies in a context of insurance, because it's a way of just diffusing that first thought of, oh, I don't need this. My company doesn't need this, right? So you go there. And then the third step is really understanding what market are you in, right? Demand, once you understand supply, that's brilliant. But demand for technology and for change depends a lot on the market you're in. And that could be a geographical market. It could be a line of business. It could be a type of risk. And it's very sad. But if there's no competition, then there's not a lot of incentive for you to do some changes, because usually you're profitable. You have the luxury of saying, oh, no, I don't like this part of the risk. So, I'm not going to generate capacity for that. So to me, when I go into those workshops, when I try to inspire people, it's really about, okay, this is everything you could be doing, right? This is what others are doing. This is what you probably need in your market. And these are the steps that you will need to take and the issues that you will face once you go on that transformation journey. So digitization or transformation is not linear. It's very company specific. It depends on how federated or centralized you are. It depends on your existing technology stack. So I like to just not provide answers, but just the tools for people to look for those answers themselves, because they will look very differently from one insurer to another. And that's part of what I really like doing and why I do, strategy and consulting.
Yes. And actually, it's, as I said, again, it's about enabling people to make better decisions. So we already talked about the fact that you are a public speaker, but you're actually also enabling executive within your workshop, your training session. Yes. So let's talk about some of the work we've done in the past years, right? We've done a lot of work around sustainability, You mentioned climate risk, environmental risk, which is affecting our industry, but also ways we can actually start alleviating some of those risks. You mentioned microinsurance, parametrics. So let's talk about some of the things we want to do at ITC Vegas 2024 and how we hope maybe a little bit to enable insurers, non-insurers, brokers, reinsurers to think about sustainability in a different way. Us in Europe, I've been doing it for a while, and probably regulation has helped to actually get insurers, reinsurers, brokers to think about it more deeply. We believe this needs also to happen in other markets, such as the United States. So what are we going to do at ITC Vegas 2024?
I think we're going to inspire people to think about, how to generate appetite and capacity for risks that have been neglected by the industry. And when we really speak about climate risk and ESG, and it's on everyone's agenda, right? You look at every investor call you hear or strategy for the next 5 years of most large insurers, they do have that component. And there is the Sustainable Markets Initiative that is being driven by Lloyd's, right? And so there's a lot going on there. But among the areas that you could transform, you could look at how you're investing your assets, and then it's all about the sustainability or ESG component of your investments. It could be about going paperless, becoming more conscious. Lots of insurers have done that. They're asking providers how they rate on certain ESG factors. They're trying to minimize travel. All of that is happening. But what's really not happening is saying, there's a number of risks that are arising, call it transition risk, call it something else, because we are moving to a world where certain things will have to change for it to be sustainable. And that transition has an impact on societies and on the way geopolitical decisions are being made. And so the complexity of the impact of transitioning to a sustainable world and sustainable economic models should be a core consideration for any insurer, because it will change the way risks accumulate and interact and integrate. Correlation between risk has been increasing and accelerating, and it will continue. But it also has generated new areas. So if we all transition to electrical vehicles and we don't have enough data about how batteries are behaving, and do we really know if those batteries are more sustainable because of the way we have to generating, because of the way we will have to deal with waste. So the complexity of sustainability is a complexity that needs to be digested by insurers. And I don't feel a lot of that is going on, right? There is a lot of, well, we have our GSG factors, it's part of what our board is discussing, but how much new risks are you finding capacity for? Are you really trying to understand how wildfires have changed the dynamics, how the gap has been widening, right? Is it acceptable that the insurance gap is widening because we have new risks or old risks behaving differently because of climate risks, and we deal with that with exceptions? I don't think it's acceptable. Yeah. So I think that's the work we have to do. We have to focus on what is the mission of the insurance industry? What have we done for 300 years? How does it apply to these new areas of risk? And what technology tools will enable you to do that more effectively? It could be black box models that are better at forecasting wildfires, like Google has been building, and say, okay, this house is insurable, this house isn't for whatever reason. Or it could be trying to understand at an aggregated level, if everyone behaves and moves into that direction, if this is where markets are going, what do we need to understand from a societal risk perspective, from a labor market perspective? So we need to start thinking about these things in concrete ways. It's not enough that we don't put a number to those risks. And so we have to get people there and say, yes, can you monetize it? Probably. Will it take iteration? Yes. We need to start iterating. Parametric insurance is a great example. Sometimes I'm on stage like, yeah, because this is new. It's not new. We were talking about parametric insurance 10 years ago. I got into parametric and microinsurance 12 years ago, right? So that was what got me into insurance. So it's not new. But we have kind of we were hiding behind excuses about what it cannot be done, why we don't have the right data to do it, why it is not, we're not able to automate parametrics in the way we should. And so that is an area where I would like to focus, right? What are the new products that the market needs? Who is the best placed to actually understand the risk and generate that new product? How quickly do they have to iterate? How do you make sure that they iterate in the right direction? So, you know, it's a long answer to your question, but sustainability is it's a complex topic. And I feel we're going for the low-hanging fruit that somehow is going to appease the market and say, well, we're trying to become more sustainable, instead of actually tackling the problem, which is we have new risks that need to be priced, period.
Well said. We have new risks which need to be priced, and then therefore needs the capacity and the actual industry to think about them. And, I want to disassociate sustainability from ESG, because most organizations are still taking and talking about environmental risk, right? We talk about climate. We are feeling the climate change. El Nino is affecting everyone.
Yeah.
The weather in the UK is so temperamental. I believe this week is around 35 degrees Celsius.
Crazy.
Last week was like, winter weather. And so this is affecting everybody. But at the same time, it goes beyond that, right? We need to look at social innovation, where we go into parametrics and macro insurance and enabling more to get insurance and be educated around it. And then, we often talk about governance, which is really about the structure. For you, probably around the pricing. If we can price things right, we should be able to insure the product, but we need also to think about affordability.
Yes.
So my next question to you, as you work with technical experts and senior leaders, you are a technical expert and a senior leader. What are the latest developments you think we should actually pay more attention to? What are the key tips, I would say, takeaways, notes you would like the listeners to remember as we move into the next 3 years, 5 years, 10 years from now? If there are a few things they need to consider as they build their business model, the operating model, and look at the future, what should they keep on their to-do list as top priorities?
So top priorities are really, you need to build an ecosystem and a technology stack that enables you to be agile, right? And I know lots of buzzwords in there, but the devil is in the detail. None of the things we need to build to stay relevant as an industry will happen if we don't have the ability to iterate quickly and to be data-driven. So you will never get a product for a new risk right on the first go. You have to build that product from the beginning as a product that will iterate very quickly, that will the ability to interact with different data sources, that will understand to which extent it has to actually collaborate with other places of the industry, because you won't be able to get the right level of data and granularity on the first go on your own. So to me, if you're not able to iterate quickly, and make data-driven decisions, then there's no way we will be able to solve any of the problems we're facing as an industry as a whole. The second one is collaboration. I mean, we talk a lot about collaboration. There's a lot of initiatives because it's like, oh yes, well, we developed a parametric product in India and we're trying to tackle this, and then someone else is, but what are we doing that we would not be able to not do on our own, right? So collaboration is, if you have a body where it's like a lot of insurers and brokers collaborating, they should be doing something that they can't do on their own. It's not about sharing what they are doing and saying, oh, I'm so brilliant, look at what I've just done, right? Which we have a lot in the industry right now. It's really about, okay, is there anything that would not happen if we were not collaborating? So I think that view is a different way of looking at solving a problem, and we don't have that enough. In other industries, you really can see that, right? So I feel that's really key to trying to find those new pockets of sustainability in our industry. So yes, many of these things are complex, but you can break them down. I really don't like the excuse of complexity to just not doing anything. And that's something we need to get better at, I think.
100%. We can actually manage that complexity if we break it down into smaller parts and then start addressing them one at a time. So we do have a challenge in our industry, which is a talent gap.
Yes.
So,
That's true.
what advice would you give to the young talent we want to attract in our industry? Maybe to come into insurance. I feel like many people in insurance, and I will not leave it because it's so much fun. And actually, people will say, well, what you see talking, insurance is quite sexy as well nowadays with
Insurance is
insurance
amazing.
technology, right? There's so much we can do. It touches everything. So, what would be your advice to the young talent
Okay,
joining
my
us?
so my advice is, we need to attract all sorts of talents. We need to attract the talent that is, fascinated by the math. And we have plenty of actuaries that feel like that, right? And are fascinated about the challenges that have to do with the tools we're developing to understand risk, predict risk at different levels. But then we also have to attract the talent that cares deeply about what we're doing. So the reason I will never leave insurance, and the reason I now go into Lloyd's and become emotional because I'm part of something that I feel is amazing and great and enabling the world, is because we are a very unique industry. And I don't think we say that enough. We are the industry that has enabled every other industry for 300 years. No innovation, no risk taking would have enabled us to advance as humanity in the last 200 years if we hadn't come up with this brilliant idea that risk can be assessed and mitigated and transferred away, and that some people have an appetite for risk that will enable you to not take on that risk when you want to innovate. So as an industry, we should be so proud of what we achieve. No other industry would be working out there if it wasn't for insurance, right? So that is something we need to communicate to people. We are inherently social. We're based on principle of solidarity, of neutralizing risks. Um, and so that is something that not every industry has, regardless of how sexy the technology components are out there, right? And everything that's really about the tools that we use. The reason we do things is critical. And I think we need to talk a lot more about that. But then the other thing I would actually tell young people is we're an industry that if you don't want to have a linear career, you can. I'm a great example of that, right? And I know a lot of actuaries are like non-live actuaries, live actuaries, but you can actually do non-life and life and commercial and personal and go from emerging risk context to a very, a different type of context to tools like ILS to things that behave a lot like financial markets. Stochastic simulations, capital. It's just the amount of things that you can do within the insurance industry is so fascinating that I can't believe that people wouldn't say, "Oh, this is really a place that I don't want to explore." I believe that young people need that variety, and we have not been good at telling them that they can find it in our industry. And finally, and this is something I told my daughter, right? It doesn't matter what you have studied. Yes, a lot of the people in the insurance industry are actuaries, but you also have people that studied philosophy and geography and history and political science and are passionate a very specific area like terrorism or geopolitical risks or climate modeling and forecasting earthquakes and hurricanes. So we have a lot of diversity and multidimensionality in the way we assess risk. And that means that anyone actually can go into insurance. I mean, I was not doing insurance 10 years ago, right? So now it's a rabbit hole. And exactly, that comes with a warning. If you come into insurance, expect not to leave. It's really difficult to say, oh no, I've done insurance, but now I want to do something else. It just doesn't happen.
It doesn't happen. And, I myself, being French, so mathematics was really, strong and great in my brain. I was social science and I was impressed by Lloyd's of London. Yeah, at the end of the day, it's a
Yeah.
marketplace. And the way they got me is by, showing me the big bill and talking to me about satellite insurance. And then I started with, have a guess, fine art and celebrity insurance, which was a lot of fun and big diamonds. And
Yeah.
people said, yes, yeah. Lloyd's insure all these specialty type of products. And then I had to do construction and buildings in Asia, which was fun, but very different from the beauty of
Yes.
things I started my career with, actually.
And it's, so much history in it. There's this guy that does this LinkedIn post that have history about things that Lois has underwritten over the years, be it, associated to some stars or a certain movie that was being filmed. And you realize how much fun it can actually be, right? Thinking about risks and how fulfilling it is to then say, oh my God, I've closed the gap. I found a way to understand this risk and make sure that it can be transferred away. You know, in which other industry can you say that? We're constantly building things, right? So when people tell me no, insurance is all gray and it's people going door to door and it's so stale and there's no innovation, that's not true. Every industry is difficult to transform. We are actually a very buoyant industry. I am so sold on it.
I am, as you know. So, Magda, if
Yes.
we were going to find you, where can the listeners go and find you and maybe give you a shout out or maybe send you a little bit of a message?
Well, LinkedIn, I get lots of messages through LinkedIn, so people can contact me there. I used to have a more active, now it's less active, but I'm trying to reactivate it again, like an Instagram. InsurTech Magda Ramada is like an Instagram handle I use to just inspire people, to tell them what I'm doing, to tell them about what's going on innovation. But the best way to actually find me is really LinkedIn, and I appreciate that. I'm very open to messages. My only ask is if you're going to message me and you want me to actually pay attention to what you're selling or what you want to introduce to me, do your homework, understand where it can be applied. Just don't sell this cold emails of let's talk on Monday, right? And then they're trying to sell me something that has zero applicability in what I do, and it's probably very applicable in other areas, but not in mine. But I'm very open to comments, and I like good discussions. You can find me on stage, you can find me on podcasts, you can just Google me. I think inspiring people really needs to be multimedia and omni-channel, and so I really try to get to people in lots of very different ways. Because we all consume information and knowledge in different ways, right? Some people are more visual, some are more auditive, others really need the contact. So yes, I'm multi-channel.
100%. So, Magda, thank you so much for joining me on Scouting for Us. It was really an honor to have you today.
No, it's an honor to be interviewed by you, Sabine. So thank you so, so much.
I hope you enjoyed this episode of Scouting for Growth. Please subscribe, share with friends, and leave a 5-star rating. Your rating is so valuable. I review all of them, and my team help me adapt content to meet your needs. Also, connect with me on my preferred channels. I am a B2B growth expert, so you will find me on LinkedIn, Instagram, and Threads, and X as well as Blue Sky. All information available below. Until next, keep scouting for growth.